The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 23rd wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start for their day. If not, well, let's make sure that you and I, that we do everything we can do to have a wonderful Wednesday. Folks, if you're a new listener here at TFNN, welcome to the Hotel California. Our check-in time is now 8 a.m. in the morning. We have a new show, so we go from 8 a.m. to 6 p.m. That is each and every trading session out there. We've got a call-in talk show. You can call any of the radio hosts. We're happy to take your call. We'd be glad and eager to take your call and take a look at your stock chart, take a look at what you are looking at, and try to assist you. Again, our call number here is 877-927-6648 for the next hour or so. What I'll do is I'll utilize some technical tools. We'll take a look at different areas of support and resistance. We'll take a look at swing points. We'll take a look at A to B equals CD patterns. We need those swing points in order to be able to form those patterns. We'll look at Fibonacci retracements and expansions, maybe Gartley and butterfly patterns, and we'll certainly take a look at Japanese candlesticks to help us identify what the message of the bulls and the bears are. So let's get right to these markets. It is wonderful Wednesday. This is TFNN.com. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow up 37 points out here. The S&P is flat, up 55 cents. NASDAQ up $9. Russell 2000 up 92 cents. NDX 100 up about 12 points. New York Stock Exchange slightly in the red out here, down a couple of dollars. Gold's up $3. She's traded at 13.09. Silver's up 3 pennies at 21.04. Out there. Again, our call number is 877-927-6648. Let's start off. Let's go take a look at the ETF structures out here. ETF structures for the indices. Let's start off by taking a look at the Qs, see what's going on inside of the Qs. The Qs here gapping up this morning. Just a small little gap. Yesterday's high was $96.76. So far, the low today, 96.77 versus 96.76. Yeah, one little penny gap out there. So far, volume during today's trading session, 7.6 million shares. Not too bad yesterday, really, when you look at it. 25 million shares, taking out the most recent swing that it was dealing with, which was July 16th, with 22 million shares to the upside. So where are the Qs headed to? Look, they are in a full bullish mode out here on the daily, on the weekly. If we take a look at, in fact, let's go look at a weekly chart out here. A weekly chart, let's go take a look at maybe a larger A to B equals CD pattern that is in place here inside of the Qs. Let's just do this. Let's just do the monthly chart. For goodness sakes, let's go take a look at the monthly, see what that is doing here. Give me a second here. We'll change this over to a monthly chart. And, of course, we'll see if we can draw an A to B equals CD pattern off of the 2009 lows. We'll do that by taking a look at the low here inside the Qs. Actually came in November 1st, 2008. That's going to be our A point. Our B point out here, you've got really two that you can select. Let's go ahead and select the first one, which is going to be the high from July 1st, 2011. No, not really much of a retracement. Of course, there's not much of a retracement on either of these moves. Down here, what you'll see is that that first A to B equals CD. Only a 28% retracement. That tells you that the market is pretty wound up to the upside here. The QQQ on a monthly chart is trading above its 1 to 1.272 level. That's a Fibonacci expansion. We use those Fibonacci expansions really as guidelines to assist us on where price is going to. It's much like a elevator. When you get above or below one floor, you're likely to gravitate to the next area. Well, inside the Qs, that would say longer term on a monthly basis, it would be targeting 106.20. You're trading right now at $96.95. The Qs have not seen a bearish reversal signal since, on a monthly basis, since October 1st of 2012. Super strong move out there. Let's come back and take a look at the daily chart out here for the Qs. If the Qs were to close today below yesterday's low, $96.34, that would give you a key reversal session inside of the markets. No idea whether that is going to happen or not. I don't think so, but it could, and that's what you would be looking for. What's a key reversal session? Well, key reversal session comes when you are in extended conditions, and that would be important with regard to the Qs as we speak today. On a daily chart, what you can see is the relative strength reading, or you should if you're watching this on Tiger TV. If you're listening on the radio, your mobile device at TFNN.mobi, thanks so much for doing that. Let me describe to you what we're looking at. July 3rd, as the QQQ ETF was moving up into a price point of, made a high of 95.70. Relative strength reading on that trading session ended up being 82.26. That is in the extreme overbought condition out here. What the Qs did to work off that condition, they pulled back just slightly, but mostly moved sideways out there. However, now it's achieved a higher high. It's doing it on less relative strength. Now, that's okay until you see a reversal signal. You see a reversal signal out there, which is what I just gave you, which would be a potential key reversal session. Again, I'm not saying that's going to happen. I'm just telling you what it is that you want to go ahead and keep an eye out for. Then you've got, then if you had follow through the next day, then it starts to get a little bit serious. Now, serious here, when you take a look at the Qs on a daily chart, if you look at the lows out here from the trading session of April 15th, now we just have to come to today's high out here. Dead cat bounce, a 382 retracement takes you to $91.82. Moving back to $88.56 would not be a big deal either. That'd just be as long as it's coming down with some light volume out there, with the exception of one big push where you have big volume, then that would actually go ahead and anchor and cement a low out there. And I know that for most of you that use volume analysis, you'd be saying, Steve, what the heck are you talking about out there? Well, it's about that unique volume characteristic that the Qs have that each of us need to pay attention to. So that's what's going on inside of the Qs. Let's go take a look at what's going on inside of the Dow diamonds out here. They're the ones that are struggling, down 27 cents. Let's go see if that really means anything out here. Now today, that would be forming a bearish engulfing session. Now the Dow here, the Dow actually had a key reversal session inside of the diamonds, inside of the DIA. That's what took place here on the trading session of July the 17th. So that says that resistance inside of the Dow diamonds is 171.32. Clearing that, old resistance should become new support. It hasn't done that here as we speak. The Dow diamonds also moved higher. They moved higher with less relative strength. They had a key reversal session. So that bearish pattern is really still in play inside of the Dow diamonds today here. It's enough to give it a bearish engulfing candle so long as you see it close below 170.56. Does that matter? Well, it just tells you that you've got some sellers that are willing to fire away up at these levels here. And the only way for the Dow diamonds, for the Dow to move higher, is to be overrun by bulls. How will we know if we're overrun by bulls? Pretty simple. You'll see a close above the high of July 17th out there, and that's at 171.32 inside of the marketplace. What we'll also see here is a move in the other element to focus on and pay attention to inside of the Dow diamonds. That will take us back here. I'm going to get to that stock chart here. It is, where is it? Right here. Here is the Dow diamond. So inside the Dow itself, the number is actually from July 17th also. That was a 3 drive to a top, a beautiful 3 drive to a top, a textbook 3 drive to a top pattern out here at the 17,150.84 level. Clearing that would be clearing and closing. When I say clearing, I mean closing above that price point. That would be a breakout. That would be defying the Bradley model. That's what you're looking at on my screen right here. The Bradley model made up of planetary alignments. And oftentimes when the Bradley model works, it's something to pay attention to. This happened to line up exactly with the Malaysia jet being shot down. Also created, but now I won't remember, weeks from now or years from now when I go back and take a look at a stock chart what the actual event was that took place on July 17th and whether that was the event that actually turned the market at this stage here. Let's assume that it actually did. We'll just take a look at patterns out here. So you do have reversal pattern. The most bearish reversal pattern out here inside of the market, and so it's something to pay attention to. Likewise, a close above that, what you will see is likely a continued move higher. Now, what we also have that's taking place today, and this is kind of interesting out here, we also have taking place today. One of the things that I learned from Larry, and there's many, Larry Pesavento I'm referring to, was to just start taking a look at what's going on up in the sky. So certainly we take a look at full moons, new moons, look at perigee and apogee. We also look at like to take a look at the daily aspectarium, which is a part of this book here. I'm putting this up on my screen. It's called The New American Ephemeris, 2007 to 2020. And on each of the pages in there for each month, it helps you to identify planetary alignments that are out there. Now, as most of you know, Larry and Dr. Ruth Miller did some work years ago taking a look at those planetary alignments by day. And what they noticed was that the market seemed to make a turn on days when you had, three or less, that's right, or using the aspectarian that he was using back then, which is different than the one that I just showed you on the chart on my screen here. And they showed that when you had 3 planets line up in one day, 3 or less or 14 or more, was an unusual event out there, and those typically led to some kind of maybe long-term, could be short-term, changes in trend inside of the market out here. So now if we go take a look at the what I did was I went back and said, hey, taking a look at computer technology, instead of doing all this stuff manually, why don't I try to automate that and do things digitally out here. So I went and I took that American Ephemeris, that New American Ephemeris, and I went out there, and what I did was I digitized it. And that meant that I could go ahead, and then I wrote a little software program. I didn't do it. I hired somebody to do it for me. Wrote a little software program that allowed me to go ahead and place any type of planetary aspect that I wanted on a chart just to see if it had any meaning. So I went back and I took a look at the P-index dates, and I did my own little table. Since the planets are the planets and they move, they move in steady cycles out there, it's very easy to understand where things line up. Now, what I'm showing you on Tiger TV out here right now is this is my distribution. This is a distribution of planetary alignments by day for a 300-year period of time. I figured 300 years was a good enough period of time in order to be able to get data to understand what the distribution of these unusual events might be. Now, all the work that was done by Larry and Dr. Ruth was all based on ephemeris time. They were just simply looking at a manual, so they weren't going to manually go back there and modify things. That's really what the left-hand column here shows. This is all based on the original work, and so we can also now understand why Larry and Dr. Ruth Miller came up with 3 or less or 14 or more. You can see, in fact, it's the 14 or more. You get to 14 or more. The occurrences are relatively few and far between. So we come back. I want to go ahead and take a look at this. The reason why I want to take a look at this is because Stevie's made a few changes here, and those changes say that today is actually a 1 planetary index date. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is off 25. S&P's up a couple points. NASDAQ Composite up 15. So I was trying to explain going into the breakout there. One of the benefits in today's day and age is you can go ahead and get access to data. This is all about big data mining out here. Now, on the left-hand side of the screen, you're taking a look at a distribution of planetary index dates, which you can grab from the Daily Aspectarian, part of the New American Ephemeris out there. And that's what I've done. So I've got 300 years worth of data out there. And you can see, as an example, this is all based on the original work. So left-hand column is all based on the original work, which was Ephemeris time. Now, our markets here trade basically, if you take a look at the cash markets, on Eastern Standard Time. So what I did, since I had the digital data, was I went back to the original work that Larry and Dr. Miller had done, and I just simply went ahead and was able to shift things so I could take a look at what takes place over a 24-hour period of time based on Eastern Standard Time. And then what we noticed was when the New American Ephemeris was published a few years ago, they actually came up with some additional planets like Ceres and Vesta, and those were added to the Daily Aspectarian and had not been accounted for. So once I found that meant that really the work, if you were going to use the current Daily Aspectarian, the work had to really be redone. So I went ahead and did that. That's what this third column out here shows. And then I went ahead and I took that same work. Now what we take a look at, so if you do have a copy of the New American Ephemeris, where it used to be 3 or fewer, now it's really 4 or fewer, where you would have what would be considered a P-index date out there, and it's now 16 or more versus 14 or more, where you would have the unusual anomaly that you'd want to go ahead and take a look at. Now, I also went ahead and I converted that to Eastern Standard Time. Well, it just so happens that today, in Eastern Standard Time, a one planetary index date based on that occurs 8 times 8 days out of, you take 300 years times 365,000, 900,000 dates out there, 900,000 days or so. So you can see it's an occurrence that occurs not very often. And that's what we have that's actually occurring as we speak today. So we do have a P-index day. We'll see if that helps to cement a bottom or cement a high. I was really expecting the market to move lower into today or tomorrow out there. With that being a P-index day at this stage here, clearly the market has not been moving down into a low, and we'll see if that had, unfortunately, with only having 8 aspects over a 300-year period of time, there is no sample size that's large enough for me to be able to tell you whether it has any meaning or not. So just simply sharing with you just some of the additional work that, by the way, those tables, everything is included inside of my newsletter service. Anyway, let's go back. Let's get back to these markets out here. Right now, the indices not really doing a whole heck of a lot, just really traveling sideways, consolidation, so no breakout or anything. That's a different story in a couple of equities in the market. Puma Biotech up 271%, up 160 on a cancer drug that they've had positive results on for breast cancer out there. So that is to the upside. Let's take a look at the IBB out here. That is up $4. That's up 1 6/10%. Let's look at the daily chart, see what it is doing out here. The IBB, the biotech for the NASDAQ out here. So gapping up this morning now. The IBB, which had the largest decline off of the largest move down off of the February 25th high out here. And that February 25th high took us down in the trading session of April 15th. When the market went ahead and made a turn out there. You can see the volume on the way down fairly large. The volume on the way up relatively small out here. Now, what the IBB has not done, it looks like maybe it's formed another A to B equals CD to the downside out here, just a small one. Let's go check that out. The A point on this is the high from July 3rd. The B point is the low on July 9th, and the C point out here on July 14th. And, yeah, it makes a 1-to-1 A to B equals CD to the downside. So what it actually has done, what the IBB has done, is it has made a Gartley buy pattern. Now, in a Gartley buy pattern, oftentimes many people, if we take a look at retracements, they'll go ahead and try to take a look at trying to – oops, sorry about that. I'm going to take a look at the retracement off of that April 15th. As soon as I grab it correctly, I'm going to do that. The April 15th low out here to that to the A point of the A to B equals CD to the downside. And you'll see that that was only a 0.382 retracement. As price got that price projection was 243.91. That still qualifies, by the way, as a Gartley pattern. All that Gartley required in his book on page 222 as an A to B equals CD pattern. Now, it completes that pattern. Let me go ahead and get rid of the A to B equals CD. So let's go see. This is a Gartley buy pattern that has formed. Not only has it formed, it went ahead and completed with a nice little bull sash candle on July 18th. So when we get back out here, back from this break is what I should say, we'll go take a look at the IBB and see what the meaning behind that little Gartley buy pattern is. Right now we've got the Dow is, what is the Dow doing? It's off 22 points. S&P is up 3. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off about 10 right now. S&P's up 4. NASDAQ Composite up 20 points up, leading the charge. You got the NDX 100 leading the charge up 0.6% out there. So let's go back to the IBB. So we established it when it had completed an A to B equals CD down, formed a little Gartley buy pattern here. That was the first move, really the first pattern, I should say, to the downside after making that trek higher back on the trading session of July 3rd out there. Now what we've seen, any Gartley pattern has got 5 potential outcomes. One of those outcomes, well, it was the 0.382 retracement. There was no problem there. Second outcome is what it attained today. Actually got attained both number 2 and number 3, the 0.618 and the 0.786 retracement level. And that's a retracement off of that high, off of the entire A to B equals CD pattern, the July 3rd high to the low on July 17th. Now, what's interesting here today is that it's trading into 2 areas. It's trading into a prior swing point. This is the IBB. That's July 14th. 613,000 shares there. Well, shoot, it's traded up. It's gapped up into it with 839,000 shares. So that shouldn't be a problem. Then what it's also doing is you had a downdraft out here. This took place on July 7th. Now, that downdraft had 1.9 million shares. As I said, we've only been trading for just over an hour, up with 841,000 shares. It should not have any problem at all clearing that swing point. So what we ought to see in the IBB is at a minimum is a test of that high from July 3rd out there. That is up at the price point of about 266. You're trading at 258 right now. You take out that swing point with volume. That's the July 3rd high out there. Number 1, it says the IBB, the biotechs are going to go back and test this swing point high from February 25th out there, and that's at a level of 275.40. And when we get back there, if it gets back there, if it takes that out with volume, then you're going to have multiple A to B equals CD patterns to the upside that would be worth taking a look at. Had some requests in the Tigers Den to go take a look at a couple of equities, so let's go do that for our Tigers and Tigresses out here. The request was to take a look at Sherwin-Williams, SHW. I believe the request was to take a look at it as a possible short. And my answer to that is absolutely, positively not, unless you have some information that tells you that Sherwin-Williams is getting ready to crater or something along those lines here, because they have been painting the town green. Mean and green out here. Last time Sherwin-Williams had any volume was only 4 trading sessions ago, and that was to the upside. And that was taking out swing points with volume. Big volume out here. The swing point meaning the trading session from March the 7th. That had 1.3 million shares out there. And what Sherwin-Williams did was it passed it with 1.6 million shares. So please, there is nothing that I can see inside Sherwin-Williams that says that you ought to go short here. In fact, if we take a look at Sherwin-Williams has one of those unique patterns as well, which is back here during the trading sessions in October of 2013, it formed an island reversal pattern. That island reversal pattern formed an A to B equals CD to the downside, and as soon as those highs were taken out, that was telling you that one of the most bearish of patterns inside Sherwin-Williams was no more out there. Right now, you've got an A to B equals CD to the upside, passing that B point with volume that we mentioned here from the trading session of March the 7th. That gives you a price projection out here inside Sherwin-Williams of about 226.25. And I'm not saying that it's going to stop there, but Sherwin-Williams, this is the kind of bullish action that you want to see out here. And even though it's had some lighter volume over the past couple of days, please go back and take a look at when it did last break out, in this case here, which was only 4 trading sessions ago. So that is a nice bullish-looking stock chart. If I put this on a weekly basis out here, there's simply nothing wrong. No patterns that I can see out here that would suggest that going short would be the right move. That doesn't mean that it doesn't fall apart when I'm off the air at 11:01. I'm just saying I don't see it. Let's go take a look at. There was a request to take a look at Facebook. FB is a ticker symbol. I believe they're out with numbers maybe after the bell today. Let's go see what Facebook is actually doing. Right now, Facebook, one of the better equities out here with regard to earnings per share increases. And thank you. J&J says after the close today. And revenue growth. In fact, I've got it's kind of a cool tool that I've started playing with, part of eSignal version 12 out here. It's a little market screener. And in this market screener, I'll go ahead and I'll blow this up on my screen here for you. Let me do this. How do I? Nope, didn't want to do that. Did I do that? Nope. Let's try this. There we go. So I did a little market screener of just took a look at stocks inside of the NASDAQ. And what I looked for was revenue growth over the past year of 25% or more. I looked for earnings per share growth over the last year of 25% or more. And revenue growth over the last 3 years of 25% or more. And then I wanted to also make sure that the equities were in bullish formation out there, and then ran a scan. And when I ran that scan, in fact, I'll just run it here right now. Here's all the equities that post up on the chart for me, and you'll see that Facebook happens to be one of those equities. You've got this entire group. Now, just because it shows up doesn't mean that these are necessarily buys out there, but if you're looking to buy some of the most bullish equities, which is what I'm looking at doing out here, this was a way to take a look at those stocks that might fit the parameters that, in this case here, that I would establish. Facebook, by the way, falls into one of those parameters to take a look at. What is Facebook doing here today? It's trading inside a swing point from March the 10th with 271 million shares. Yesterday moved in there with 193. Today so far it's done 105 million shares in an hour of trading. I got to tell you, it's not as if traders are shying away from Facebook when it's trading up towards a swing point high on a day when they're going to be coming out with numbers. I can only assume here that what that means is that Facebook is likely going to beat their results, and if it can't take out, this is a weekly chart, by the way, that we're looking at, so I'll go back to the daily. My apologies. This is a weekly chart that we're taking a look at. If it does on a weekly basis take out that high, so let me restate this. So 271 million shares versus 105. So it's a little bit light little bit light on the weekly chart because we're just really into Wednesday. So let's go back and take a look at the daily chart out here. And on the daily chart for let me finish it off on the weekly. On the weekly chart here, if we end tomorrow and it gets above 72.59, if it closes above 72.59 out there, volume or not, if it does have the volume, we'll have a confirmed A to B equals CD on the way up inside of Facebook. Now let's come back and take a look at the daily chart. Let me get things all on kilter here. And on a daily chart, let's go back and take a look at that swing point that it's traveling into. Now, what it recently has done here, Facebook took out a most recent swing point from July 1st. That had volume of 33 million shares. It took that out with 49 million shares. That was a couple trading sessions ago, so that was nice. Facebook also trading inside a bearish reversal candle right here, bearish engulfing, a key reversal session. That's from the trading session of March the 11th. Remember, a close above 72.59. That tells you got a change in polarity. That volume out there is 59 million shares so far today, up with 16 million shares in hours of time. Multiply that times 6. It's moving up into that swing point with pretty decent volume out here. So I don't know if the question was looking for bullish or bearish out here, but if you're looking to sell Facebook before the earnings, I don't see any signals on the chart that would suggest that that would be the case. If anything, this says to me more likely that Facebook is likely going to, the response, who cares what Facebook comes up with, what the response to Facebook is going to be as far as shareholders is going to be blowing out that swing point high out here from the daily chart, which is the March 11th time frame. So that takes care of Facebook. If we take a look at, let's go take a look at a couple other stocks that showed up in Stevie's stock screener out here. Let's see what we got. Let's take a look at Catamaran and Ctrip.com. Both of those I know at least having either are or have been at one point in time in the IBD 50 list out here. Let's take a look at Ctrip.com. Right now, this is trading up towards its highs. Yesterday, getting above a market profile resistance level. It has a swing point high out here from the trading session of July 2nd, 1.6 million shares out there. So far today, this has done 269,000 shares. Yesterday was 1.3 million shares. So it looks like it's going to go try to visit that. If it can take that out, you'll set up multiple A to B equals CD patterns, meaning get above the July 2nd high. Last time this had any volume was down here on the trading session of June 24th out there. If, in fact, this thing ever does fall out of bed, expect that to be a level that would be tested. That low is $55.17, and the high is high out there is $59 even Steven. If we take a look here at another equity, I mentioned Catamaran, CTRX. I recall this equity getting crushed in the past, but this thing here is now trying to, So here's a stock, that shows up on the little scanner that I run. Right, good revenue growth, good earnings per share growth over a 1 year period of time, over a 3 year period of time. Of course, this thing fell out of bed, and the shareholders really sold off on February 27, 2014. I believe that was the first time. Let me pull this back out here. Give me a moment and pull this back. Now, that was not really the first time that this thing fell out of bed, but it was the first time that this fell out of bed with just simply massive volume out there. And that says that there's a huge supply line. That's what it's trading into right now. So if you take a look at that, let me go ahead and I'll clear the chart just a bit. We'll clean this off just so you can get a better visual of this. And so if we take a look at, let me get rid of the moving averages out here. We'll do that. We'll really clean this chart up. There we go. So now we have a bet. That was an earnings date, by the way, inside of Catamaran. CTRX is the ticker symbol out here. And if we take a look at the actual low of that trading session, that's going to be the price point of 44.70. Take a look at how price right now is just struggling. So all of the people that bought into Catamaran, maybe they bought into it on the trading session of February 26th, maybe it was February 27th out there, they are just happy to get their money back out here. They're just like, thank goodness. And you can see that's what's been happening as Catamaran has been trading at these levels out here. Has it changed its? Has it changed its trend out here? The answer is yeah. Actually, when something makes a low, as Catamaran did back here on April the 30th. Anything's trying to make lows out here. What you want to do is you want to find a sign of strength, and that's really what Catamaran had out here. CTRX had a sign of strength, but never pulled back to the actual breakout session out here. It just got inside that gap. Now, this could If we pull this back, let me put this on a weekly chart and take a look at the damage that was done on a weekly chart for CTRX. And because of that supply line, I'm not suggesting that you get in on this equity. But if we take a look at the retracement that it has done here, because maybe this will raise its head one more time. If we go from the low to the high out here, the retracement a little bit less than a 0.618 retracement out here. The weekly basis, the weekly chart, that shows a very nice reversal signal. In fact, if you take a look at Catamaran, which we are doing right here on a weekly basis, if we take a look at as it was making its lows back here, this is the week of April 7th, April 14th, April 21st, and then April 28th. This is what's referred to as a Morningstar reversal pattern. But more so than that, this actual pattern right here, most people overlook a Morningstar reversal pattern because they're only taking a look at 3 trading sessions. And if you actually had a candlestick scanner, you'd see that it too would not have the intelligence built into it to be able to pick that up. But this pattern right here that you're looking at on a weekly basis for Catamaran, very bullish. In fact, it's the same pattern that was present in the Dow at the March 2009 level on its daily chart out here. It's what I call my University of Miami pattern because it contains that U of M, not the University of Michigan, but the University of Miami logo out here. And that says that at high volume bar, which we know when we took a look at the daily chart, it was a sign of strength off of the bottom. This is the weekend at April 28th out there. Nonetheless, that low, 36.98, is a very important low out here. So what I would say is what you'd like to do on Catamaran, it hasn't really broken its trend, so to speak, out here on the weekly chart. The trend line, if you come off of the high from August the 5th, you can see where it's got quite a ways to go before it gets back into its trend line out here. But if this thing could pull back on a daily chart, pull back into the area where it broke out from, then maybe it would be something that you would want to consider nibbling at out here. You can see when price had pulled back, it also pulled right back into an original breakout area. So you've got this U of M pattern. If you did that where I'm going to, let me draw a horizontal line across my chart out here so you can see that as well. Now, this thing on a weekly basis had a breakout session from April the 16th. And the low of that was 38.76. Notice how when I pull this off to the right-hand side here, as we go ahead and expand this up, notice how price was stabilized right there. So whoever was supporting the equity back here, they still believe that it is a good buy, and that's really what their message is. So in the case of Catamaran, I know this was a long-winded analysis out here, but one worth noting because of the various patterns that it has. What you want to do is take a look at maybe buying this on a pullback out here, or on a momentum play if it can break through the supply line. The problem is that supply line lasts all the way up to the price point of $52.98 out here. And we've only seen one sign of strength on a daily basis inside of CTRX. So be careful if that is a trade that you would be taking a look at. Right now, we've got the Dow is, give me a moment here, it's down 6 points, S&P up 5 points, NASDAQ Composite up 21. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 8, S&P's up 5, NASDAQ Composite up 13, up 19 points right now. So let's kind of summarize where we're at with the day out here. Right now you've got net advancing issues inside the New York Stock Exchange of 725. We don't have much in the way of movement. It's up 14 points right now. If we were to see 1125 or more net advancing issues, it'll tell you that the wider swath of the market, the New York Stock Exchange, just switch hands from bears to bulls, and we'll see what the bulls can do with it. At this stage here, the bears basically, even though they've had the ball for the last, 10, 15 trading sessions, they've done absolutely nothing. I mean, absolutely nothing with the ball. So that tells you what kind of strength or momentum, in my opinion, it tells you what kind of strength or lack of momentum that the Bears actually have out there. So that's one of the things that you want to take a look at. What's another thing that we want to take a look at? Well, I haven't talked about my favorite currency pair out here because to a certain extent it's been letting us all down. However, nonetheless, I can't ignore it. You can't ignore it. What the Euro-Japanese yen has done inside the 120-minute time frame is it's made a bottom out here. It's made a lower low. It's done it with less relative strength. That's called a price relative strength divergent bottom out here. Nice bullish engulfing candle. That took place at 7 o'clock this morning. It did sell off a bit, so there wasn't any more momentum into the 9 o'clock time frame, but we're seeing that it is fighting its way back out there. That is more from a liquidity standpoint, a positive liquidity liquidity aspect with regard to what's going on inside of the market. So that's the second thing to take a look at. Let's take a look at our other liquidity gauge out here, the VIX Index. The VIX Index right now trading at 1157 out here. The 50-day exponential moving average is at 1207. What does that say? That says plenty of liquidity for the markets to move higher out there. If you're short the market, you want to see the VIX above the 50-day exponential moving average. Pattern-wise, what happens when the VIX is below the 50-day is the market will move either sideways or higher out there. That being said, we took a look at the consolidation patterns inside of the ES Mini. I believe we did it on the 120-minute time frame chart out here. Let me see if I can pull that back up on my screen for us. This will take just a moment to do. It might take more than a moment. But we're going to take a look at what you also want to focus on for the day, and that was the level out here. That's the blue line. That is the horizontal line of 1978.25. You can see you are above that on the 120-minute time frame. You're at 1982 right now. A 33-point move is what is being offered to you inside of the S&P futures if it can stay above that 1978 level. 1980.50 is the market profile resistance area on the 120-minute time frame. This here will end at... Will it end? This says it does not end until about 12 noon. So at 12 noon, if you've got the ES Mini trade above 1980.50, it'll be another indication of a potential breakout. If you take a look at the A to B equals CD pattern that is associated with this on the 120-minute chart, you come down to the low here on July 17th. You come up to a high that was put in at 2 o'clock, 4 o'clock in the afternoon on July 18th, a retracement down into 12 noon on July 21st. The 1-to-1 A to B equals CD gives you 1990. The 1-to-1 .272 gives you 1999. 2000 would be the number, and I suspect that is, and I believe the breakout takes us to... 2011, something like that. So I'd have to say that is likely the target if we see a breakout of this area out here. Likewise, a continued failure to break out says, okay, the bulls just don't have the energy, but that does not mean that you need to necessarily turn bearish out here. So, folks, it is Wonderful Wednesday. That means our man Basil Chapman is up next, so stay tuned. Go ahead and get your surfboard ready, and let's go ride the wave with Basil. And thanks again so much for joining us. Remember, we're live now 10 hours a day. We kick things off here at the Hotel California. Check-in time is 8 a.m. Have a great trading session, folks. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.